Welcome back to 60 Plus Uncensored, the podcast where we throw out the rulebook, smash stereotypes, and celebrate the raw, unfiltered reality of life after 60. Today, I'm honored to introduce Carole Sue Fiedler, founder and managing director of Innovative Settlements. Carole holds the distinction of being the nation's very first licensed Viatical settlement broker, and she's spent decades advocating for policy sellers with transparency and integrity, with a determination to make sure that every seller gets the highest amount possible for their policy. In this conversation, we'll uncover how Carole Sue helped shape the settlement industry, why ethical representation matters, and the lessons her career offers for anyone facing big financial or life decisions. Please join me in welcoming Carole Sue Fiedler. Carole Sue, thanks for being here. Tell us a little bit about yourself.
Oh my, of course. What can I say? I'm a girl from the Bronx. I've always loved people. I grew up in an environment where I had neighbors and kids all around me, and I was basically taught to, these are my brothers and my sisters, reach out and help somebody if they need help. They're going to be there for you at the same time. And that's really formed the foundation, I think, of who I have become now so many decades later. I left New York in 1990. I was a real estate broker in New York, loved my job. I worked in all facets of real estate I started in residential management and went up to brokerage and then sales. But in 1990, a number of aspects came together. I decided it was time to fulfill a lifelong dream, which was moving to San Francisco, even though I had never been there. And I literally picked up and I moved. I knew nobody. I started from scratch. A year later, I fell into what has now become the life settlement industry, which is literally $1 billion multinational business. And I think I was very blessed. I was in the right place at the right time. And I was I met people through one of my close friends who were living with AIDS and were literally given a death sentence. Their doctors in those days would say, "You have AIDS, there's no hope, you have 6 months to live. Go have a good time. Quit your job, have a good time." And it was discovered that their life insurance policies, oftentimes large life insurance policies that they had through their employers, could be sold, could be liquidated, not through the insurance companies, but by private companies who had the money to simply buy those policies at a discount from the face value. What that did was give the individuals who were dying money, no strings attached, to do whatever they wanted with it. And then ultimately when they died, whoever gave them the money gets the full death benefit. In about late 91 is when the very first brokers were started. None of them are around anymore. I worked for the first two. And during that time, I discovered that it was actually the first one. I realized that there were companies out there, they were mostly on the East Coast, who the individuals with the policy would go directly to a company to sell the policy. There was no brokerage. They only heard probably of one company. So they would go there, they would sell the policy to them. Whatever offer they got, it was better than they had expected. They were thrilled, they'd take the money, and that was that. I started to hear and meet people who happened to call a company that always lowballed. They offered $10,000, no matter what size of the policy. So once I realized that that was really happening, this is when my good old Bronx temper got into it. And I said, no, we can't do this. And that led me to starting my own brokerage. And this was now 1993-ish, 2 or 3. And The rest of it is kind of history. Um,
So
but my
you moved to San Francisco in what year? You said 1990?
1990, June 23rd, 1990.
June, and you had a lifelong fascination with San Francisco, but yet you had never been there. So how was it when you got there? It was cracked up to be in your mind, or what was that like moving across the country?
100%. I thought I'm very visual, and I do have a background in real estate. So I've always been interested in architecture and the way buildings are built and how they look in the landscape and next to each other, all of it. I was fascinated. San Francisco is such a gorgeous and diverse, physically diverse place between the hills and the buildings and the Golden Gate Bridge. And then you got the weather, trying to figure out the weather on top of that. The people were wonderful. I was just having the time of my life.
And so you moved there as a single person, all by yourself.
Well, I had my cat Magic with me.
You had your cat Magic with you. Okay, but other than that, you were all by yourself, and you had been a real estate broker. Now, when
Right.
you hit the shores of San Francisco, had you thought about becoming a real estate broker in San Francisco too?
I did. And when I landed, I was staying with a family in, I guess it's the inner Richmond area. It was a beautiful area, all big mansions and such. And I would get on the bus every day and I'd work the newspaper ads. I saw 68 apartments in something like 30 days. And what I learned is that every single apartment you walked into, no matter what the building looks like on the outside, you're always going to be surprised when you get inside. There was no consistency. Everything was unique and I thought fabulous. But I didn't want to start learning all of that. I felt that I'm not going to leave the top of my field in New York City and then start at the bottom here. So I gave up. I decided I'm not going to do real estate. I'm going to find something else to do. I was probably in my late 30s then. And back to the old newspaper. Every day I would be looking at the help wanted ads. Not finding anything of interesting. I was completely open to anything that sounded interesting. And I hadn't looked at the help wanted ads in years, so I really didn't know what to expect. There was an ad that I saw quite a few iterations of. It always caught my attention, but it never said what it really was. I called several of them, and it was insurance sales, which truly is the last thing I would have considered doing. It's just not up my alley for a number of reasons. However, I believe that things happen for a reason. So since nothing else was going on, and I saw that as an invitation to an opportunity, I ended up getting my life insurance license. I sold life insurance a little bit. I got the securities license so I could sell, fractionalize things, mutual funds, etc. And I did not like it. But during that time, I was offered a part-time job helping a friend of a friend get all this paperwork together for a new insurance-related business she was starting. And that was the first settlement brokerage. And it was a Viatical settlement brokerage only. They were in, and this is why I call myself the first one, because I was indeed working for that first company, but they were selling their policies primarily to one broker. So they were, to me, that's not brokering the policy. They may as well tell the client, look, this is the best company, just call them. They weren't creating the competition. They weren't doing what a broker is supposed to do, make sure their client gets the best deal. In this case, it's getting them the most money. And the only way you're going to know if you're getting the most money is to first establish the appropriate market price for it and then aim for higher than that. But if she wasn't doing the establishing the price part, she was just guessing.
Well, how do you establish the price part?
Well, in my case, I have an indication in my head as to, I do the generalities. In truth, a viatical settlement, which is how this all started until 1998. Viatical settlement is specifically with people diagnosed with 24 months or less. And that also makes it tax-free. So going into that, and then all of our clients were terminal, we understood what to ask for. It was pretty clear-cut. If somebody had 6 months to live, I'd be aiming to get them the most possible, which usually the highest would be 85%. Because if it's a $100,000 policy, the new owner, let's say, pays them $85,000. There's only $15,000 left to play with, which is fine if that individual does die within the 6 months. But if they outlive the expectations, which is what I always want to see, I figure I get them the money, they're going to get healthier and lighter and less stressed, and they'll live longer. But that's the antithesis of what the buyers want to say. So the sicker somebody is, the more money they're going to get. By 24 months, maybe you're looking at 60%. Now, when life settlements came along, and I'm going to get back to how it's all calculated. When life settlements came along, the demographic changed. So now, instead of people with a terminal illness, now it's people without a terminal illness. But they still have to fit into a shorter life expectancy. So when we're looking at people now with up to 10 or 15 years guesstimated to live, either by their age or health, and mostly a combination of both, those are policies that can qualify. The catch is when they're figuring out how to make the money or how to prepare an offer. And the same thing is when I'm evaluating, is this policy going to sell or not? We're looking at the age and health of the insured, and then the cost of the policy, the premium expense for every year. So if somebody has 15 years to live, whoever is going to buy the policy is looking at paying premiums a minimum of 15 years. So that premium expense has to come off the top, right? Because the new owner is going to keep on paying it. So from there, then we look at, okay, well, what's left? Here are our other expenses, most of them in-house. These providers, I've been told more than once, that they come to an average of 6% of the policy to do everything else. All the processing, life expectancy reports, staff, yada, yada. 6%. So that comes 6% of the face value or the amount purchased. So that comes off at the top. Then you got my fee or other fees. So all of that gets added together, and that's whatever is left goes to the client.
Okay, so this is interesting to me. So, really, right up until this conversation, I had thought that when you get a viatical settlement, is actually the insurance company paying that to you, and
No,
it's
but I can
not.
explain that.
It's a broker that's somebody else. Like, who are these companies that do viatical settlements? Are these like brand name, like major corporations, or are these like mom and pops?
Well, it really varies, which is another reason I think that anybody, any individual looking into this should really research and find out about these companies before they approach any of them, or deal with a respected broker that knows all the ins and outs. Unfortunately, there are very few of us. Fortunately for me, but there are very few. And at this point, I'm one of the very few that's actually actively working with viatical settlements. And that's because the policies for life settlements are larger. Commissions are larger if the policies are larger. So on the viaticals, the policies tend to be easily 10 times smaller, which would cut any fee I would make by 10 times. But those people need help more. And in the frenzy of the industry changing to life settlements where the larger policies are, and it's more of a business decision, it's more of a practical decision when an older person sells their policy because they don't need it anymore. They don't want it anymore. Maybe it's too expensive now. So it makes sense to sell it now that that's an option that people know about. But when I sell a life settlement and the people walk away with their money, I very rarely stay in touch with them, and vice versa. On the other hand, the people with the viatical settlements who need the money so much more, it makes such a bigger difference to their lives that they end up staying in touch with me more. Or I them, because I also, feel very compassionately towards them, and I want to help them, and I want to make sure that they're taking their meds and they're getting out for a walk and, all that stuff that the doctors are telling them to do. That's just a bonus of working with me. A little Jewish mother comes with it.
So when you get a viatical settlement, like what kind of life insurance policies can be sold for a viatical settlement? I mean, there's like whole life, universal life, like term life, and there's a whole bunch of other kinds of like life insurance policies, and some of them have a cash value anyway, which you can cash out. And if you have a cash value, what happens to that cash value with a viatical settlement?
Okay. And we need to talk about accelerated benefits from the insurance company also. Whole life policies are not the majority of policies, and they are the ones that generate a cash value. So that money is already the person who owns the policy, they've been paying more than the cost of insurance, and that extra bit is what ultimately builds the cash value. So if I'm selling a whole life policy, I will always get them more than the cash value. So they're going to get their cash value plus. Or else we don't sell the policy and I just advise them to take the cash value. Or to keep it and let the premiums come out of it. There are always ideas I can give them if I cannot do what they really want, which is to sell it. And if I cannot sell it, it's because the providers won't buy it. It's that there's no money for their situation. So it's not that I'm saying, no, I don't want to do it, or it's impossible for me personally. It's just it's not going to fly in the market at all. So that's whole life. Universal life is most common now, and most of them, the premiums are lower than whole life. They're convertible. You can do a lot of different things with them. They typically do not build a cash value at all. So that's a straight sale. But the premiums on universal life can be manipulated. So what we do on my end is find out what the least amount of premium is just to keep it in force, because that frees up more money to give to the seller. So there's that. Term is very interesting because a term policy is good for 5, 10, 20, 30 years. And the premiums are level for the time of the term. Now, typically, you would think they're very desirable to buyers because $1 million policy, $400 annual premium. I literally have one here right now. And because if they can buy a policy and pay only $400 a year, that's a very low cost policy to them if they can get it really, really cheap. Because the thing is, in this case, the premiums stay at 400 until my guy is 75 years old. He's only 52 now. So, and heart disease is what he has, and that's very difficult to predict. So even though the policy is cheap for another, 16 years maybe, unless they can be assured that he's going to die, they're not going to pay anything. So it's all that combination. In his case, I know it's a long shot, but he does have a rare heart condition. So I figure it's a 50-50 gamble for somebody. You know, if you can give me $150,000, $200,000, you'll get this $1 million policy. There's a 50-50 chance the guy's going to die before you have to convert it. So back to term policies, if they are convertible, they can be sold.
Okay. All right. So,
Oh,
so
and the ADB.
what's the ADB?
Once we started doing this in the 90s, we started to change the insurance industry's lapse rate. The lapse rate then was 9 out of 10 life insurance policies were let go, surrendered, or people just walked away from them, and the insurance industry never had to pay anything. 90% in 1996. Once we started with the Viatical settlements, and the insurance companies then all of a sudden have to start pay out more death benefits. That's when they started paying more attention to us. Eventually, now it's closer to 85% lapse, but eventually what happened was the insurance industries came up with their own counter to the Viatical settlement industry. They're called accelerated death benefits or living death benefits. They should be included with the initial policy. Sometimes people need to ask for it, but it should be there. The problem is, well, it's not really a problem. When somebody's looking at selling the policy, I will always look at their policy to see if they have an accelerated benefit. Most of the time they don't qualify for it, but they will qualify for a Viatical. And with the Viatical, they can have a life expectancy of 24 months or less. But with the accelerated benefit, many of them are only 6 months or less. The majority are probably 12 months now. But people tend not to want to wait that long. If they know they're dying, they want money as soon as they can get it so they can enjoy it or do whatever they choose to do. So yes, there's an option from insurance companies now, and it should be compared to a Viatical settlement. And then the seller does what's best for their personal situation. I first get the information, make sure they understand it, and then it's their decision, what to do with it.
So a lot of new policies have this accelerated death benefit. So let's just say I have a $500,000 policy, and I all of a sudden find I have stage 4 cancer, and I have 6 months to live, and I might get an accelerated death benefit. Like, what are they going to do? I mean, so that one is not sold. That the insurance company is going to pay that out with an accelerated death benefit. Is that correct?
If you qualify, yes.
If you qualify.
And you should. With that kind. Now, here's another catch that they put in. With your $500,000 policy, let's say the accelerated benefit is for 6 months. Then they're only going to pay maybe $125,000, up to half of the policy, or $125,000, whichever is less. So some of the insurance companies put additional restrictions on it. But if it were just clean, 6 months or less, accelerated benefit, the best one I've ever seen paid out close to 95%. So it's really imperative that we look at the policies completely and see what are the options. That's why I always stress, you have options, find out what they are first. Then you can make an intelligent decision. But, there are companies who won't necessarily point out that there's an accelerated benefit. It's research, research, research. That's People need to protect themselves, especially in this stage and age. And it's about getting as much information. I think it's about getting as much information as you can. And now, unfortunately, because of AI, because people don't always tell the truth, I always recommend getting all the information and then comparing it. If something sounds crazy, toss it out. If something sounds interesting to you that maybe you'll go for that, check further. Look at who the company is. Look into regulations. Viatical and life settlements are all licensed, but the insurance department in California even made that confusing. So nothing is as easy as it should be for the consumer.
So with the accelerated death benefit, like, is that negotiable at all, or is that just predefined in a policy?
To the best of my knowledge, it's predefined in the policy only. Although I suspect that if somebody wanted less than the full amount, the insurance company would
They
do that.
they would be okay with that. Okay, so you're saying though that if there was like a $500,000 universal life policy that had an accelerated death benefit, they might only pay 125,000, even if
If,
you're only like maybe 6 months from dying, and that the
if
rest of
that
that they would just keep that.
if that's what's written into the policy, it all goes back to the contract, Seb. So we've
Okay,
got to
so
look
if
at the
so,
policy first. If that same person came to me with a 6 month life expectancy, they're going to get at least 70%. I would be fighting for more. But unfortunately, the whole market has changed. When we went from viaticals to life settlements, and because the majority of policies are now life settlements that pay out so so much smaller percentage wise a settlement. Like if they're paying out 10% on $1 million policy, that $100,000 may still be sizable to the policy seller, and the investor is getting it for only 10%. So when all of a sudden they've got a viatical in front of them, now we're looking at, we need short-term money because most of the money that's invested is for a longer term. The sweet spot for the buyers are people with a life expectancy of 3 to 12 years, where I can make the most magic. And remember, no terminal illness. When I have something like 3 to 8 years or so, that's when I can really kind of pull out more money.
so wait a second. So I thought though that a viatical settlement is for somebody who is projected to die in the next 2 months, but now you're talking
20,
about 12
okay,
years.
24 months or less, 2 years for viatical settlements. Non-terminal illness over 65 is a life settlement. So that's where you get the senior population now. So they're not going to get as much for their policies as somebody who's terminally ill will, but it's still a viable marketplace for them where none ever existed before. See,
So
that's the beauty of this, is that in 1911 there was a lawsuit which ultimately deemed life insurance policies as personal property. So if they're personal property, just like a home or an automobile, they can sell it, they can leverage it, they could do what they want with it. 1911. Fast forward to August 1996, when we get the announcement that there are drugs to manage AIDS now. The people with the money that had been buying these AIDS policies already saw that there's potential here for a great new industry. And it's all backed by the insurance companies. So if we put money now, we know we're going to eventually get it back. It's an uncorrelated market. There's no other marketplace in the world that's like this. It doesn't matter what the stock market does or the price of gold or anything. So when that happened, I lost my train of thought. Now they have to pay a lot less, but they get the bigger policy and expanded to just about everybody. Oh, I was telling you, 1911, it became legal in 1911, which people don't know. So back to 1996, when AIDS became manageable, these same investors were looking for a way to expand the market. What do we do now? We already know how this works. We have all this money to buy policies. What kind of policies can we buy? So they determined that 90% of all life insurance policies lapse. We just need to find that 90% and let them know this is an option. I don't believe it's about selling. I believe it's about providing information. I say to people sometimes, here, let me just talk to you for a bit, take that information, wrap it up, put it on a shelf in the back of your closet. But if you ever need it, that's when to look at it. Like if somebody's looking at getting a reverse mortgage, let's say an older couple, they have a home, it's beautiful, they live there forever, they can't get around it anymore, they're having some real problems. They may look into a reverse, which itself comes with strings attached. It has to be paid back. It accrues interest, the loan that they're giving, but even then, the money they can get from the bank isn't going to pay for the ADU they need to build. What do? Nobody in the past would even consider looking at their life insurance policy. But that's what I'm asking that they do. Look at your policy. Talk to me. Let's see if that is a way possibly for you to get the cash now. Now they may have two options. Now you can get a settlement or you can get a reverse mortgage. Which one suits your needs best?
But so a life settlement though is not a viatical settlement. They're a different thing entirely.
Well, it's the same exact process. Conceptually, it's the same process. Viatical settlements are typically more work because I'm dealing with more medical records and oftentimes many more doctors. Viatical settlements are tax-free, which is a beautiful thing. Life settlements are not. Life settlements are taxed above and beyond the cost basis of the policy. So there's that. The companies that purchase these policies are different. Some are the same, but some don't know what to do with a viatical settlement. I've been making calls the last few days specifically on this. I have my regular go-to companies. I know who I believe are the best, but I'd like to send it to at least a third company, and I'm having trouble finding a third company that has that kind of money now. Short money. They have to pay more, but they get their return back faster. But these guys have long-term money. So they'll buy the longer policies, the longer life expectancy policies. But the process is basically the same. A lot of the brokers, there are independent brokers out there now because at some point the laws changed to allow regular life insurance agents to act as viatical and life settlement brokers. That was great for those agents. It's another stream of income for them because that allows them to get a commission. But they don't know what they're doing. I believe it's impossible to know as much as I do about what's going on in this industry every week, and also another industry selling life insurance policies on the primary market and reselling them. The reasons for reselling them are opposite all the reasons that same agent is using for selling it in the first time. There's a conflict of interest there that shouldn't be. And as a result of the life agents being able to do this, many people across the country are advertising that they do life settlements. And in all probability, from my own experience, what they do is refer it to somebody like me. I actually don't get those referrals. I know other people in the industry who has relationships like this with agents. And every single time when the agent just funnels him the client, my friend does all the work and then he splits his commission 50-50. So that's why the agents are in this to get their commission, which is fine, but they're only sending it to one company again. It's just, people need to do their research. It all comes down to that, Seb. They need to do their research and know who they're talking to.
So, tell me what it's like to like negotiate one of these life settlements or a Viatical settlement. I mean, I guess you need to have like a note from a doctor, or is it like a whole big report, or what kind of documentation is required, and then how long does like a negotiation typically take?
Good questions. Um, well, now a lot of medical records are online. So I have to actually get copies of medical records. Um, from that, I am not a physician. I am not qualified to guess any life expectancy. But I can read these and determine that this person is very, very sick or not so sick. I have a sense of it. Each company that I send it to potentially buy will first review it in-house. So they have an in-house team of medical professionals who review these policies, and now I'm not privy to their in-house stuff, obviously, but I guess they review them and then get back to them with their guesstimate of the life expectancy and maybe how certain they are about it. If the policy is larger, the company will send it out to another one or two longevity companies, possibly, to get different evaluations. And then they'll take them all and make a blend, take an average, and that's the life expectancy that they use. Now, in addition to that, as I said, I have the medical records. I oftentimes have a letter from the physician, but everything's backed up by the science. So that's how that works. As far as the insurance goes, term policies have the premium expense built right into it, but I always go back to the insurance company first and verify the policy is enforced, the premiums are paid, various clauses have to be there or agreements before I can show it to somebody else to buy it. I had somebody recently hired me to sell a policy that's going to disappear in 7 years. And she wasn't going to tell me. But I found out, just doing my basic research. And then I called her on. I said, "Did you know this?" She said, "Oh, yeah." I said, "So you were trying to get me to sell something that's going to have no value in 7 years?" That's the first time that ever happened to me.
Right. Well, that's no good. So, but they're going to do their evaluation on the medical records and whatever else, and they're going to figure out how much they can pay. But is it negotiable at that point? I mean, like, do you have to
Well,
negotiate, or they just figure it out and they say, Carol, Sue, it's going to be $63,729. That's it.
exactly. Now, here's the fun part for me. First, I do it's called bidding. I do that as part very strategically. There are the providers. Providers are the companies that have the licenses to buy the policies. They can buy it direct from people, they can buy it from a broker like me. So each provider has their own source of money. So let's say I'm looking at, well, let's keep it simple, two different companies. One company may have 30 different investors out there. Either it's individual investors or they're groups of investors or it's a bank, it's institutional funds. It's all removed several steps, but there are pools of money that they have. And if there are 30 of them, they'll pick the ones who are looking for policies just like this. So, for starters, they're getting each provider I send it to is putting it out to multiple investors as well. So let's say it's going to be a minimum of 10 each. And so let's say that's 10 different offers. Those investors are going to come back to the provider and tell them the numbers. At the end of the day, that provider is going to come to me and say, okay, this is what I can get you. Now, if I have 3 different providers, or let's say I have 5, who are coming back to me with their best offer, that's now I know what the market value is. The market value for this policy is somewhere between the lowest offer and the highest offer.
Right.
So, and then I negotiate those offers. I will speak to each of those 5 providers, assuming they're all within line. And I know them all at this point, so I have good relationships with them, so we're honest with each other. I will work them each against each other and get as much as I possibly can.
So you do negotiate with them. They are negotiable. There are multiple
I,
in.
oh, I will absolutely negotiate with providers. They know it. They expect it from me. And because I am creating a real competition, they have incentive to offer me the most because they want the case. This is the most fun part for me, other than actually talking to the clients themselves. This is the part I really love.
But how long does this take, though? I mean, like, like on average, you turn you turn the case in. Is it like a week? Is it a month? Is it a
No,
quarter?
on average, I would say the fastest this could get done if everybody cooperates, maybe 2 months. On
Okay.
average, it takes, I would say, 2.5 to 4 months. When I'm dealing with a big policy, it could take longer because there's more money to play with. So I keep on going back and going back. And the other thing that's really interesting is that, and I don't know why, but oftentimes when I start to put a policy out to bid, towards the end, the first people will come back. If it's still, oh, now they want it. So it doesn't always pay to rush it through. However, on a viatical, it has to be rushed through because
Right.
it's so precious to them. So that's another place where, in my mind, a viatical has different rules. But that's more about me as the person who's managing the case to help this person than it is about the industry.
Right. Okay. I got that. And now, I believe you said earlier that 90% of life insurance policies lapse, and that means that people stop paying the payments, and then there's a grace period, and then after the grace period, they can't be reinstated. Is that how that works?
Again, back to the contract and the insurance company. If they pass a 30-day grace period, some life insurance companies will say, sorry, that's it. You blew it. Others, if it's within a couple of days, maybe 15 days or something, they might allow it, but that would require a personal phone call. It's not going to happen automatically. But yeah, 90% lapse. They're not by mistake. They're not by mistake.
They lapsed on purpose. So what
They
you're
lapse
saying
on
is,
purpose. Most
so
people,
okay, so someone's like 87 years old and they have a life insurance policy and they're like, eh, like screw it, whatever. I'm just gonna stop paying. It's like hard to make ends meet right now. I'm just gonna stop paying my life insurance policy because my wife died. My kids are okay. Just forget about it. But what you're
Perfect
saying
client.
is that they
Perfect
can
client.
actually go to you and just say, I can't afford my life insurance policy anymore. It's 500 grand. I'm 87, and then you can sell that policy for them and get a not a viatical settlement because there's nothing wrong with them. They're not terminal, but you can get
Right.
like a life settlement for them.
In all probability, I'd have to see the policy, of course. But yeah, that's kind of the perfect client because he
That's the
doesn't
perfect
need it
client.
anymore. He doesn't want it anymore. There's no reason for him to keep it, so why not get the cash for it?
Yeah, he's been paying it for 50 years. He's been paying it, right? So
Exactly.
there's a lot of money in there. So in a case
Exactly.
like that, let's just say again a $500,000 policy. He's been paying for it for 50
It
years, and
depends on the premium. How much is he going to get? It depends on the premium expense and what his life expectancy is. I can tell you up front that he'll qualify just because of his age and the size of the policy. Because that tells me at 87, his life expectancy is not going to be another 20 years.
right?
If he's
Yeah. So
also got health things going on, that will indicate more money for him. But if he's 87 and healthy and he goes to the gym every day and he's totally fine, it could be a lot less.
so the average life expectancy for a man is 78. This guy's 87, say. So that means he's already exceeded his life expectancy, or do they calibrate that based on height, weight, medical
Oh, no, they
history?
look at everything. Remember, they're looking at his medical records completely. So they're going to be able to see whatever illness he may have, any progression of it, what his lifestyle is, all of that. And then
Okay.
their job, the provider's responsibility is really to their investors. So they want to buy the policy but pay as little as possible.
Right.
On the
Right. Of
other
course.
hand, I want them to pay as much as possible. So right there, you've got our wiggle room off the bat.
Right. Okay. So
I
for
don't think I've ever taken the first offer without asking for more. I always ask for more. It's just
Well, that's what I tell
automatic.
people in real estate. Like, it's rarely is anyone's first offer their best offer, right?
Right,
Rarely
exactly,
people don't
exactly.
make their best offer their first offer. So, um, okay. And then you mentioned the viatical settlement is tax free, but the life settlement is not tax free. So let's just say, now this is round numbers, average. We don't got to
Of course.
like figure out like all
Right.
the who's, what's, and wherefores and whys. But let's just say
Mhm.
$500,000. He's 87 years old on average, ballpark. How much might a settlement like that be, roughly?
I can't. I'm sorry. I don't want to
It,
mislead you by spitting out a number. Each company, besides having their own book of investors, they also have their own individual um, in-house costs, their own buying parameters. There's so much involved in it. I think I could safely say you're not going to like it between maybe 12% and 30.
oh,
I don't
okay.
know.
All
I
right.
don't
Well,
know.
that's good.
It
So,
really it depends on the case. I,
right.
it's
So,
so hard because I really do get multiple input before I have any numbers that I could work with. So it's
right.
not just coming from my own head, but I'm being told what it is from the people that actually have the money and have access to all those calculations from their own in-house. Now, I would never let them know what the other is doing, but I still benefit from all the information because then I could best use it for my client.
Right.
Does that
Okay. So, yeah, that makes sense. So, between 12 and 30%, and let's just say though that it's 20%. So 20%
okay?
of 500,000 is $100,000. Of that $100,000 that they might get, how much do they actually get? Right? There's like
Well,
because
they'll
you said it's
get a hundred
taxible,
thousand
but
dollars.
no, but in a life
Well,
settlement you said it's taxable, not a viatical. A
well,
life settlement you
yeah,
said it's taxable.
but I'm not taxing them. If I offer them, if I say the best offer is $100,000, when the deal is all done, they will have $100,000 wired to their account, or a check if that's what they want. Once they get the money, then it's up to them to report the taxes. You're talking about a life settlement now, not a
Right.
buyout.
Yes. Right.
So the first thing they want to do is go back on all of their records and determine how much money they have paid into the policy. Over all the years they've had it,
Oh,
add
and
up
they figure out their
all
gain.
those premiums. That's your cost basis.
Oh, and maybe it's a loss, right? Maybe they paid more than $100,000 over all that time, in which
In
case it
which
would be
case,
tax free. And and
exactly.
so and so there's no charge, there's no cost for you. You are paid by the person who buys the settlement or buys the
Right.
policy. Yeah.
Right.
Okay, so that's
And
baked
I
in
get paid 15 days after my client gets paid.
because there's a rate of rescission. Is that right?
Exactly. Exactly.
Okay, all right. I think I'm starting to get a hold on this. And so whoever buys the policy is going to continue to pay that policy until the person passes away. And
Exactly.
at that point, they will be named the beneficiary, I guess, of the policy, and then they will get
Yes.
all the money.
Exactly. During the transaction, once I have offer and acceptance, we create a sales contract and we assign the policy ownership and liability of the policy to the new owner, and well as changing the beneficiaries to the new owner's choice. And in exchange, the money, which has now been sitting in an escrow account, gets released to the seller. And, we wish everybody well. The provider will stay in touch with the seller, depending on if it's a 6-month person, a viatical. They may stay in touch with me, or they may, call every once in a while. That is agreed upon before everything gets signed. And of course, I'm coaching everybody, so this is no surprise to my clients. Not, oh, by the way, yes, you're going to get the money, but you need to deal with them. It's not like that.
Right.
We try to be as least intrusive as we can be. If it's a longer term, the provider will probably send a postcard that just says, hey, please sign and send it back. Yes, we're trying to see if you're still alive, but so
Right, proof of life. Got it. Okay. All
exactly.
right. Well, Carol Sue, we have to wrap it up here. But I think that some people watching this are going to want to, maybe talk to you about this, to at least to learn more. What's the best
Oh,
way
of
for people to
course.
get a hold of you?
Well, thank you. First of all, thank you so much for having me. I appreciate it. Well, my email is innovativesettlements@gmail.com. My website is innovativesettlements.com, and my direct phone number is 415-925-1175.
Okay, that's a 415 area code, beautiful San Francisco area code. But you work coast to coast, is that right? You're not only in California?
I am physically only in California. I do work coast to coast. I am licensed in numerous states, and I have business colleagues who have the licenses that I do not have. So if somebody shows up in a state where I personally don't have the license, it's not a problem because I have another license from their state that I work under.
Okay, all right, very good. So no matter where you live in the United States, if you need a viatical settlement or a life settlement, Carol Sue Fiedler with Innovative Settlements is the person to call. Is that fair,
That
accurate
is,
statement?
that is. And I'm always happy to provide information. If you don't want to talk to me, that's okay. Just research what you're doing and research the companies. There's a wealth of information out there. If something sounds too good to be true, it is. Stay away from it. If somebody is trying to sell you something around this idea, whether it's money to put into it or to sell your policy, walk away. You should never be pushed to do anything, especially financial.
All right, very good
It
advice.
it never, no charge. I analyze policies every day. I'll do that for free. Just call me and talk. 415-925-1175.
Perfect. All right. Carol Sue, thank you so very much for being on the show. I really appreciate
Thank
it,
you.
and
This was
I will
fun.
I'll catch you on the flip side.
Okay, I look forward.
Well, that's a wrap for this episode of 60 Plus Uncensored. Huge thanks to Carol Sue Fiedler for setting the tone with such honesty and insight. Now, if you like this episode, do me a favor and do Carol Sue a favor. Hit that subscribe button, leave a review, and then share it with someone that you know who needs to hear it. And hey, if you do know someone over 60 who's still out there doing big things, living boldly, working with purpose, or aging on their own terms, I'd love to hear from you. Reach out at team60plus.com or join the conversation at 60 Plus Uncensored on Reddit. I'm Seb Fry, and this is 60 Plus Uncensored, because as we're learning, life after 60 isn't the end, it's just getting good.
Subscribe now.